Today, we're talking about how to invest in the Nigerian stock market and how you can find the right stocks. The reason the rich keeps getting richer is because most of them understand the stock market and how to use it to their advantage. You might already know about the Nigerian stock market and the potential it holds, but how do you benefit from it to start growing your finances and building wealth the right way and stop losing money to bad investments? Let me tell you something. You've been learning about stocks the wrong way. Here is the good news. There is a right way to know if a stockbroker is SEC regulated, the exact steps to pick the right stocks, find hidden gems that are undervalued, and determine your risk tolerance level so you won't go and have high blood pressure over a stock or an investment. And the best part is that this works 4 out of 5 times. Let's face it, nobody can tell you that they can 100% predict the market or teach you how to 100% predict the market. That's just not true. By the way, my name is Henry Uche. I am a stockbroker and an investment professional. This is what I do all day, every day. If this sounds like what you enjoy, hit the like button and subscribe to my channel to learn more about finances and investments from an insider. Let's dive into the video. Number one, understanding stocks. Before you start investing in the Nigerian stock market, you need to first of all understand what stocks are and what the Nigerian stock market is. Imagine your favorite company is a big cake. Owning a stock is like buying one slice of that big cake. Buying a stock basically means you own a piece of a company, and these small pieces are called shares. And because you are one of the owners of those shares, you are called a shareholder. But why would you want to own shares in the first place? As a stock owner or a shareholder, you're automatically entitled to a percentage of the company's success. This means when the company makes profits, that's that extra money that is left after all expenses have been made, they can decide to distribute these profits to their shareholders, which means you get a portion of that profit just because you own part of their shares. For example, let's say MTN has 1,000 shares in total and you manage to buy 100 shares out of those 1,000. You automatically own 10% of MTN. This means you own 10% of MTN and any monies they make as profits. This brings us to the next question. Where can you buy and sell shares? The primary place where Nigerian company shares are being bought and sold is the Nigerian Stock Exchange, the NGX. Think of the NGX like an organized market. But instead of selling clothes and shoes, they connect people who want to buy shares to people who want to sell shares. And to keep everyone safe, the government has rules the NGX and the companies listed on the exchange must follow in order to keep investors like me and you safe from being cheated. So what do you benefit from owning stocks? There are two main ways you can earn money from owning stocks. One is through capital appreciation and the second is through dividends. So what is capital appreciation? Capital appreciation is actually simpler than it sounds. It simply means when you buy a stock today and the price increases tomorrow. For example, you buy a share of Dangote at 14 naira per share, and Dangote company start doing well, and a lot of people start noticing this and start buying Dangote share. The simple increase in demand start driving the stock prices higher and higher, and eventually you sell your shares at 70 naira. That increase from 40 naira to 70 naira is what we call capital appreciation. The second way you can earn money from owning shares is through dividends. Dividends simply means the money paid by companies to its shareholders after making a profit, sort of a thank you for their investments. Let's say Dangote company goes on to make a huge profit and decides to share 50,000 naira with its shareholders. If Dangote has 1,000 shares in total, each share will get a dividend of 50 naira attached to it. That's 50,000 naira divided by 1,000 shares. So let's imagine you own 20 shares, which means Dangote will pay you 50 naira times 20 shares, which means you will get 1,000 naira cash paid straight into your bank account, no stories. Many big companies like MTN, UBA, Zenith Bank all pay dividends to their shareholders annually or biannually. This simply means they pay yearly or twice a year. If you've been benefiting from this video, kindly leave a like and subscribe to this channel. And if you want me to create a specialized video for dividends, what companies pay dividends, let me know in the comment section below. This leads us to our next problem: how to choose a stockbroker. You now know what a stock is. You're interested in buying some company stock, but you don't know where to start. You don't know what stockbroker you can use that is both reputable, licensed, and registered with the Nigerian Stock Exchange and the Securities Exchange Commission, SEC. To choose a stockbroking company, I always advise people to use stockbroking companies attached to the banks. This gives you the confidence that your money is safe. After all, the banks haven't run away with your money in the savings account yet. I call this kind of stockbroking companies the legacy stockbroking companies because most of them have been around for decades. We also have the Gen Z stockbroking companies like Bamboo and Cowrywise. I recommend you use a mix of the both. For me, I use CSL Stockbrokers as my legacy stockbroking company and Bamboo as my Gen Z stockbroker. Another way to make sure that the stockbroker you are using or want to use is licensed with the Nigerian Stock Exchange is to simply visit their website. Don't worry, I'll leave a link to this in the video description below. Here you will find all the stockbrokers in Nigeria, both the active ones and the inactive ones. Another thing most new investors do not consider is brokerage fees and commission. I know you say, but Henry, it's not just 2%. Let them have it. Yes, I know it's just 2%, but when you're investing 100 million naira, that 2% automatically translates to 2 million naira. Is 2 million naira that insignificant? The best way to know how much brokerage fees a stockbroker is charging is by simply calling them or sending an email to them asking them exactly how much brokerage fees they charge. And they will respond by telling you the exact brokerage fee they are charging. This way, you should be able to pick a stockbroker that charges a moderate fee. And do not go for the cheapest because in my experience, the best stockbrokers are never the cheapest. So how do you even open a stockbroking account? Here are steps to open a brokerage account and how to start investing in shares. Number one, to open a brokerage account here in Nigeria, you need to first pick a licensed stockbroker within Nigeria, complete their online form or physical form, then submit the required KYC documents to complete the account opening process. After submitting these documents, your preferred broker will open a CSCS account for you and an in-house trading account so you can start investing and buying shares. So, what KYC documents are you expected to submit? Number one, you need to submit a government issued ID card, which is like your voter's card, international passport, driver's license, or your NIN slip. Number two, you need to submit a proof of residence, which is like your NEPA bill, your waste bill, or a statement of account showing exactly where you live. Mind you, this shouldn't be older than 3 months. Number three, you need to submit a standard photograph of yourself, which is like a passport. And four, you need to submit a signature specimen, something like this, not my signature by the way, just to complete your KYC verification. Number two, fund your account and place your first trade. After your account must have been verified, you can now deposit money into your stockbroking account using your stockbroker's preferred payment option, which includes bank transfer, use of credit or debit card, or e-wallet payment options. And some stockbrokers actually accept US dollar deposits. When it comes to finding the right stock, I usually use an app called Simply Wall Street. Full disclosure, they are not sponsoring this video. It's just a good tool and I find them extremely useful. When you want to buy a stock, don't just buy any random company that comes to your mind. Research the companies, research the industry using criteria like the company's past performance, the industry, if the industry is growing or if the industry is declining. Evaluate a company's dividends history. If you are seeking income, check if a company has a consistent history of paying dividends and ensure they have the earnings and profits to support those dividends payouts. Also, news and press releases. To review financial performance, look at a company's financial statements, annual reports, earnings reports to assess its profitability, revenue growth, and debt levels. These reports are usually found in the investor relations part of a company's website or on the NGX platform. Check competitive advantages. Research how a company is positioned within its industry. A strong competitive advantage, like a dominant market share, e.g., a company like Dangote, or a strong brand presence, indicates long-term profitability. In this video, we learned what stocks are, what you benefit from owning stocks, how to find the right stockbroker, how to go about actually buying shares, and most importantly, finding the right shares to buy. If you learned something from this video, hit the like button, subscribe to this channel to learn more about finances and investments. See you in the next video.